Hello everyone, how are you all? I hope you are keeping fine and healthy. In this video today, we will be discussing about the tricks of accounting. Now, many of you are doing work from home or are related to accountancy field, so this will be quite beneficial to you. Accounting plays a very vital role in business of every size, but often it becomes a very low priority for small business owners, specifically as they juggle all other responsibilities of managing, maintaining day to day preparation. So it becomes quite hectic. However, accounting should never be treated as an afterthought. Now, why? Because this will lead us to various problems. Many maintaining balanced books can help financially forecast months into the future and alert you potential and financial gaps. The right accounting insight could even help you save your business in case things get tough or you face difficulties. One reason why accounting often gets put on the back burner for the small business is that it's tedious and intimidating. 40% of small business owners feel that financial management is the most difficult part of preparation or operation in a business. When accounting mistakes occur, it can halt the growth of your small business and put you on shaky ground. So, we should never avoid that part. In the post, we are rounding up the best accounting tips to avoid common mistakes that could have a detrimental impact on your business. Once you are operating with clean books or clean financial records, you'll reap the benefits that will come out of it. So let's start with it. Firstly, pay close attention to receivables. Getting paid is the most exciting part of running a business. Managing your receivables isn't quite as much fun. I do understand that. When an invoice is issued, you record a receivable, meaning you log that a customer owes you money. By checking this listing, you are able to easily see if a customer has an outstanding balance or not. When the customer pays you, the amount should be applied to their invoice or his or her invoice, and it should be marked as paid. However, when you are trying to keep up with a lot of orders, this is easier said than done. Customer deposits all too often are left reconciled at a later date since they are never enough hours in the day to complete it. That means that when tax time comes around, you are left with a lot of customer deposits in your revenue account and a report of your receivables that really don't match or tally. The consequences of this are that here you are wasting your time, hours updating your listing. You can overpay on your tax return and you will have enough debts. That is why you need to make it a point to be very important to keep track of your transactions as they are happening as now. Apply your customers' payments monthly. It can save your tons and tons of time and money definitely in the long run. The second tip I will give you, keep a pulse on your cash flow. When it comes to small business accounting tips, education is very important. It is rather everything. The more you understand the numbers in front of you, the greater your odds are at managing them well. As you perform weekly or monthly financial reviews, consider producing a cash flow statement. This will be very beneficial. These statements give you a broader understanding of cash movement within and outside of your company. A cash flow statement essentially monitors income direction. It will also include the element of time, enabling you to visualize payment cycles and seasonal expenses. Cash flow statements can also give you the knowledge that you require or you need to anticipate expenses and more appropriately allocate income. They are really very useful when building financial trajectories. This will help you out of it. You don't have to generate a cash flow statement. However, in order to understand monetary motion, this will be important. Simply using the right technology can help you get a holistic vision of how cash is functioning in your business model. If you choose to automate your bookkeeping services, for example, you will be able to easily visualize metrics and data about cash movement. Now, the next tip I'm going to give you about accounting is log expense receipts and generation. Unfortunately, it is a common mistake for small business owners not to save copies of their expense reports. This can result in a wide range of tax, accounting, and cash flow issues, and this will also lead you to problems. If you have ever looked at your bank statement and seen a charge for $100 or 100 rupees and had no idea what it was all about, then you are familiar with the problems that come with poor record keeping. I'm sure you don't want to go through that. One way you can solve out this problem is by saving a receipt of every purchase that your business makes. It may seem like a lot of work in the beginning, but there are few accounting tips to make it easier. The first is to use one credit card to pay for all business expenses. This will reduce your work. Keep track of your receipts by having a designated location for them, such as a spot in your car or on your desk or something else. Or better yet, snap a picture of your receipt on your phone instantly. These tricks keep you organized so you can file the taxes on time and with appropriate amount. People are always asking questions about where to draw the business expense when they ask for accounting advice. Now, if you want to know what you should claim, see if they fall into these categories or not. Out of town or travel expense. If you'd had to travel for business, the money you have spent on a plane ticket should be claimed. If you spend a lot of time on the road, you could be writing off the miles on your car, along with the gas expenses definitely. Home or office expenses. If you have spent money on a computer or maybe other office supplies, you can write them off on your taxes. Entertainment and meals or your food. If you paid for drinks with a client for a nice dinner, include that in your expense report. For gifts, this can be related to entertainment and meals or food, but not always. If you go to an event or a meal with a business prospect, then it would be entertainment and meals. if the prospect went on their own, that's a gift. Expense reports can make all of the difference during tax time. Make sure that your employees know the importance of saving receipt and itemizing expenses when they are out so that you'll have accurate records come tax season and you will not have problem in filing your tax. The next tip I would like to give you is record cash expenses. When or if you are an entrepreneur, it is crucial that you track all the expenses related to your business. That way, these costs can be subtracted from the amount of your total income when it comes the time for filing the taxes. This will give you a more accurate sense of your overall profitability or loss or whatever the income position is for the year. It is easy to book past expenses paid for in cash. Ask for a receipt from your vendor or log the expenses immediately to ensure it makes it on the books or it is appearing on the books. The fifth tip I would like to give you is know the difference between invoices and receipts. They are not the same. Mixing up invoices and receipts is a very or too common way for small business owners to mess up their books. A simple piece of accounting advice is to follow or it is to know the difference between the two. An invoice, what is an invoice? An invoice is a bill that's sent to customers after they have received your services. Think of invoices as detailed bills that should outline everything the customer has received from your company. An invoice will reminds customer that they owe you money. They are helpful for speeding up cash flow, keeping financial records, and definitely ensuring that you are getting paid. There is no debt. But what is a receipt? A receipt is a proof that a transaction happened. It's what you give your customers after a transaction is fully complete. Mixing up receipts and invoices can make accounting a nightmare. If you can't tell what's completed and what's in the progress, you are going to run into a lot of trouble when you're trying to balance your books. This will, trust me, this will really be very problematic. The next thing I would like to say is keep personal or business accounts distinct. A lot of small business owners use some of their personal funds to keep things running for the first few months. There's nothing wrong to it. But with dipping into personal funds or using your personal bank account for business can be really troublesome. You will not have any accounts of it and you will fall into trouble. Having a separate bank account for business needs makes it easy for you and for your accountant or bookkeeper to see how money is being spent. If you choose to use your personal account for business purposes, you could be overlooking important business transactions, and that will not be a good sign for your business. Moving forward, make sure that you properly distinguish your business and personal finances. Keep them separate. This may mean simply setting up a separate credit card and checking accounts associated with both. Be very careful or mindful of spending decisions, ensuring that your business accounts are used for business related costs and not your personal account. The same goes for personal account also. Use personal account for your personal transactions. We recommend relying solely on credit cards for all business transactions. Now, why is this? This is because credit card statements provide you with an automatic and easy way to keep track of your expenses. This will be really helpful and you will not lose your track. Cash payments can be easy to overlook. Many business owners struggle to stay on top of receipt management. Neglected cash payments can lead to inaccuracy in cash flow management reports, and therefore it will help in poor forecasting. The next step I would like to give you is hire a professional to handle your taxes. Many people try to save money by doing their taxes themselves. In reality, if you don't hire a tax professional, not having access to their accounting expertise can cost your business a lot of money down the road. You might lose a lot of money in the same process by doing it on your own. It is possible that you could miss a deduction you qualify for or underpay your bill, leading to penalties. If you spend the money for a professional, they know very well what they are doing and will use accounting tips to put you in the best financial situation. So there is no losing point there. They will be up to date on the ever changing tax rules and tax laws, and they can plan ahead for tax hikes that may be coming your way in the near future. So that will really help you a lot. The next point I would like to share is maintain clear communication with your accountant. When you work with other professionals like accountants or bookkeepers to manage your books or financial records, you might find the jargon they use are confusing. It's important that you let them know if you don't understand the terms they are using. Come clear across that. You are a small business owner, not a financial professional. So there's no shame to it. You have no reason to be up to date on the latest technical terminology being used in the financial industry. So if you have problem in understanding that, ask them. You need to see your accountant and tax professionals as part of your team. They should be watching your back and giving you accounting tips and tricks that you can bank on. The next tip I would like to share is understand the double entry bookkeeping system. Now, most businesses these days are using accounting softwares rather than physical books or handwritten financial records. But the accounting tips behind double entry still apply. The basic idea is that whenever you make a purchase for your business, you record not only the expense but also what was gained from the transaction. Let me give you an example. For example, if you bought a pair of shoes for $10, then you would write down -$10 on your balance sheet. But under double entry bookkeeping, you would also write +10 for inventory gain. This is the advantage of double entry system. Unless the money you spent has truly been lost, this style of bookkeeping will be the best way to represent where your money is going to. That way, you can make the best decisions for your business. The 10th tip I would like to share is chart your accounts. For the most well-rounded picture of your business, you need to have multiple accounts and not maintain only one single account. Each key aspect of your business should have a space for logging its transactions and the balance of the account should be adjusted or recorded accordingly. Some of the most important accounts to keep track of I will discuss here. Firstly, you have to maintain accounts receivable, money customers owe to you, that is in this account you record. Money payable, that is money you owe to someone else. Sales, that is your revenue. Then you have to maintain purchases, that is supplies. Payroll expenses, owner's equity, that is the money you and other owners are putting into the business. You have to maintain retained earnings, that is your profit. Those who are more detail oriented can go even further into splitting their accounts into sub accounts and subsections to keep track of individual transaction or product purchases. This will also be quite beneficial. The next step I would like to share is prepare financial statements. In previous accounting tips, I have looked at the different kinds of financial statements a business prepares or it is important for a business. Some examples of this are the balance sheet, income statement, and cash flow statement. This will be helpful if you are a business owner. On a monthly or quarterly basis, you should prepare each of these financial reports or statements because they will help you analyze the health of your business from different or various angles. The balance sheet shows a snapshot of your business assets and liabilities and equity at a specific moment in time. The income statement, on the other hand, will show or reveal the income and expenses that took place over a defined period as well as your business bottom time or the initial time. And the cash flow statement allows you to see how your cash balances have changed over a period of time. If you were a publicly traded company, you would be required to produce financial statements or financial records on a quarterly or annual basis for your investors. Since you don't have this or you probably are not into this requirement, it is up to you now to decide how often this kind of report should be made for your business. But I will say you don't skip this at all. The next point or the next step I will give you, look to the future. When you compile a monthly financial report, use it to help anticipate your business's financial trajectory. This could simply involve identifying upcoming costs such as tax payment or legal fees. It may incorporate more nuanced plans for your company's expansion, including budgeting for new hires and higher rent. Forecasting in this way can help you or enable you to effectively and properly utilize existing assets. Not only this, it can also help you confidently plan for other significant milestones in your business evolution. Forecast effectively by analyzing your financial data on a monthly basis. Data-backed analysis can ensure smart investment moves. The next tip I would like to give you or share with you is leverage technology. In practice, trying to keep accurate accounts in a complex process as your business grows, this process becomes even more stressful and hectic. A single transaction you can involve multiple entries into several of your different accounts. When there are hundreds of these kind of transactions, it can be overwhelming to try to keep a record. Now, this is where the help of technology comes in. this will be helpful for technology if you're using this. Accounting systems are much easier to use than recording every transaction your business makes into physical ledgers the way things used to be done previously. If you decide to use your software for your accounting needs, make sure you still have or you're keeping a copy of all your receipts, either physically or digitally. This way, you can go back and verify everything if you see any discrepancies or something is not tallying when you go to your balance of your books. Now, these are all the tips that I have shared. Many of you are into accounting or many of you are into business, so definitely you will find this useful. Maintain the books properly, keep records, and definitely keep copies of it. So, this will really be helpful. I am sure I have shared a lot of good tips and tricks for you all to follow, and this video will really be beneficial. So I will conclude my video here. I hope you liked the video and you have got some benefit out of it. Concluding, just stay healthy, stay safe, and keep sanitizing yourselves and your family members or your house, everything, the products that you bring in. Stay safe, stay healthy. Thank you.